Hey, Michella, how are you doing today?
Good. How are you today?
I'm great. I'm great. Thank you so much for coming on. I really appreciate it. And I'm pretty
Thanks
sure
for
the
having
audience.
me.
Yeah, for sure. So why don't we start from the beginning and we'll just, you can take it away from there. So tell me about what you were doing before you got into real estate.
Right. I am a marketing director of a global agency, and before doing marketing and real estate, I had an academic research career.
Oh, wow. Okay, that's nice. So then how did you get into real estate?
I started investing in residential real estate 4 years ago, but I've taken a long pause to take care of my personal matters and also to stabilize my W-2 career. Now that I'm an accredited investor, I came back to a completely different market, wanting to uh, restart my machine in investing in real estate. But I discovered that I've come back to a completely different market
Yeah.
requiring a different strategy. And it almost to a point that I realized that I have to unlearn a lot of things I learned before. So yes, so because of this, I am focusing on multifamily syndications right now.
Oh, wow. Okay, nice. There's a lot to unpack there. You said you were accredited investors and then now you're getting into syndication. But then what I want to know is why did you choose real estate? Exactly, because there's a lot of avenues you could have gone through, especially being an accredited investor, right?
Right, exactly. And I have many choices in front of me. I got very lucky, I would say. Actually, with a marketing background, my easiest route of having a business
Yeah.
is to be in e-commerce, actually, which is
Yeah.
like my bread and butter, like every day that gives me my paycheck. Yeah.
Yeah.
And as an accredited investor, I actually have a choice of becoming a limited partner and LP of
Hmm.
syndicators all the way. And there are indeed people who would want to touch nothing about operations and
Yeah.
be an LP forever. And there's nothing wrong with it at all. They are very sophisticated.
Yeah.
But I think it is partly my personality and partly like my family background. I grew up in a family of entrepreneurs. My parents run a huge business overseas, and
Nice.
unlike a lot of us, like in a mentorship program or a mastermind program, for example, my parents actually run a successful business and make cash flow out of it to invest in real estate.
So you
So,
grew up around that.
right,
Okay,
exactly.
I
And
get it. That makes
I know,
sense.
right. And I know a lot of us are the opposite. We can be people who are investing in real estate, get cash flow out of it, and
Hmm.
wanting to buy businesses or
Yeah.
invest in holding businesses instead. So
That's so
yes,
true.
my parents come from the opposite direction on the route, but I think we arrive at the same avenues, which is that if
Buy
we
real
want
estate.
yeah, real estate is the thing to go, and it is actually a great avenue to build a transgenerational wealth. Yeah, and that's where I am now.
Wow, that's amazing. Because it's so interesting when you said that because it's so true. A lot of people in real estate that even that I'm working with right now, they're buying a bunch of properties and then they're trying to get the cash flow, and the whole purpose of getting that cash flow, obviously there's financial freedom, but outside of that, it's to buy businesses. That's like the whole focus, right? So the fact that you're saying that your family comes from a background where they literally did the opposite. They built a business, took the cash flow, and then put it into real estate. It's pretty interesting. It also makes me understand that at the end of the day, everyone puts their money towards real estate. Right there's
Right,
a
exactly.
that says something about real estate itself as well, right? So yeah, a lot of like dots getting
Right.
connected over there.
Right. I would also like to add that there is a very specific reason for doing that for my parents, and it
Yeah.
makes a lot of sense. And that is because we grow up in a high appreciation market. So
Oh,
yeah, I was born and raised in Hong Kong actually, and
right.
people are very comfortable with buying real estate that has no cash flow because the appreciation is crazy.
Yeah.
So it actually makes sense for them to generate cash flow from a business, put it into real estate, and let and watch the money grow. But again, this may not be the route for low appreciation market.
Yeah.
In that situation, it might make more sense to generate cash flow from real estate and go into businesses. So
Yeah.
yeah, it's all about your execution and your strategies in this case.
Yeah. Awesome. So what kind of real estate are you interested in? Because there's a lot of different avenues that you could take, right? There's like, midterm rentals, Airbnbs, long-term rentals. There's multifamily, single family, like what route are you taking in real estate?
Right. I personally like stability, and because of this, I like investing in assets that is focusing on long-term rentals. I
Okay.
actually do not touch midterm rental, and I do not touch short-term rental at all.
Why?
Just why, like, yeah, right. I know the money is there.
Because
I
yeah,
know.
the money is there, right? You like yeah, there's a bit of a risk, right? And sometimes the low seasons in certain environments and markets can be very low. Because I've done Airbnb
Right.
before, and I know like the winter seasons can be low, the summer seasons where you make all your money, but it kind of averages out, even though there are more expenses when it comes to cleaning and everything else. So, why is it that you're against the Airbnb side of it?
Right. Not necessarily against it. It's just a preference on business model. I
Okay,
think partly it is because that after COVID, we see that having a roof like
over
above
your
you,
head,
having
yeah,
having a place to live is essential. But it turns out that like traveling is not essential, and even going to office for work is not essential. Although like the going back to
yeah,
office thing is making a comeback by a lot of big corporates out there. So
yeah.
yeah, personally, I would like to invest in something that is more stable, and because of this, I would highly prefer investing in assets that target and long-term rentals for families, which means that I will be focusing on most of the rental units that are having 3 rooms or above, that is more catered towards the needs of a family.
Oh, okay, wow. So then that's pretty interesting. So what you're looking for is like recession proof, pretty much, right? Because you don't want to do travel. You want to only do something that's essential. So and long-term family rentals are like something that's essential. It's like, food and water. It's essential. You need it. And you need a roof over your
Exactly.
head. Okay, so that makes
Exactly.
a lot of sense. And then you're saying 3 bedrooms. So I guess like younger families would like that, that are like new wouldn't be really your target, right? I'm talking about like one, like a couple with like one kid, right?
Right,
Who
right, right.
just wouldn't really be your target, right? You're looking for like someone with a little bit of a bigger family, or like 2, 3 kids that are going to probably stay there for a longer period, right?
Right, right, right. So, and of course, like we are like underwriters as well. We
Yeah,
underwrite all the deals very intensively.
yeah,
That and our underwriting always include a facet in market research, meaning we
okay,
also go ahead and assess how strong the market is to support a rent. We also assess all the qualitative side
hmm,
of like attractiveness of a
yeah.
neighborhood that would support the rent and support rent increase in the future as well. So like this also means that when we underwrite a deal, numbers can be one thing, but we really focus on looking at the stories behind the numbers to see whether it will work for our so-called target audience or
Right.
target renters.
So what kind of neighborhood are you looking at? Like, I'm guessing the ideal target would be like a B minus, right? Or a B plus, not so much A, and definitely trying to stay away from like the C minus. So I'm guessing the target would be around like B minus, so somewhere around there, right?
Yep, that is totally correct. And we are also looking at up and coming areas that have new employers moving in, creating jobs. To us, it really depends on what deals we're looking at, whether it is residential single family or larger multifamily syndication deals. For example, if we are looking at multifamily syndication deals,
Hmm.
we will be focusing a lot on the assessment of how strong the economy of that market is, meaning whether there is new employers bringing job into that market and where are they setting up their headquarters in that area. So
Sounds
like,
like you
mhm.
would love Austin, Texas.
Yes,
Right?
yeah, and yes, yes, totally. And we are also looking at another market, which is Columbus, Ohio, which
Nice.
some an analyst has already deemed to be the second Austin. We will see whether it's true or not. But like so
Really?
far, yeah, but so far, like our research results says that like it's pretty promising. Actually, like large companies like Google, Amazon, Microsoft um, are like and also like one other one that I don't remember right now.
Another
Unfortunately,
tech
yes,
company, yeah.
another yeah. There are four. There will be a total of 4 companies going in there to build. data centers in Northeast Columbus.
Okay,
And like
wow,
it
I didn't know that.
Right. And it happens to be like in a B neighborhood, which means that there is a lot of promising growth into the area in the upcoming years because there is job growth, which will also support rent growth.
Wow. You know what I'm interested in knowing actually in Columbus, Ohio, because I know like in Texas, it's pretty easy to build houses. The regulations are low. As even in a place like Illinois and Chicago, it's easy to like develop and build. That's why real estate prices are slightly lower, right? So in a city like Chicago, you'll see like lower overall real estate prices because there's just more housing supply. It's simple, right? And same thing in Texas, all over. It's so easy to build. So I'm interested because I know nothing about Ohio, absolutely
Mhm.
nothing. But I do know. I've heard a lot of investors going into Columbus just because like it's apparently supposed to be recession proof. During every recession, they usually leave like the other surrounding cities like Cleveland and go down to like Columbus for jobs and so on. So I'm
Mhm.
interested to know like what the development is like there. Like, is it hard to get permits, passed through, like to start development? Like, how long does it take to put like shovels in the ground, right? Like,
Right. Like, your question is actually spot on, Keith. And this is actually one of the biggest challenges to invest in Columbus because, like, unlike other parts of Ohio, permits can come only in a week. A building permit in Columbus can take up to 4 to 6 weeks to get approved. And also, the local
wow.
government is now realizing that this can hinder the further growth of Columbus as a
Mm.
city, providing enough housing for the influx of population they are expecting when the jobs come in as well. So, like on the policy side of things, we are also seeing that the government is trying to work towards it to shorten uh, the like amount of time to get a permit approved. And they are also offering a lot of opportunities in what is called opportunity zone, with like tax credits for investors, for example, so like they can build up like older areas like and can like fill it in with like new energies.
Okay, wow. So like that's pretty interesting though, because it takes what 4 to 6 weeks, right? So then technically, if they don't change the policy, then you probably see like a surge in appreciation prices. Like I know that I shouldn't be saying that, but then it's kind of like a benefit in one way because if it takes 4 to 6 weeks, and because I live in Toronto, and here it takes like 6 months. It's ridiculous to get a permit passed. So then we have ridiculous housing prices here, right? So
Right.
you won't see that in Columbus, but then you could still see like a good amount of appreciation, I'm assuming. So that's
Right.
something like yeah, I should probably look into Ohio. I've never, I'm usually
Mm-hmm.
stuck to like just Texas because of how landlord friendly they are, but
Mm-hmm.
it raises a lot of like interesting points. So outside of like Columbus and I guess Austin, Texas, what other markets are there like that you think are prominent or promising?
Right. Well, I have a very unpopular opinion.
Really?
I
Okay.
I feel very bullish about Seattle, Washington.
What? Why?
Yes.
That
Um, yeah, like I so like we have a team in Washington and
yeah.
like we're still seeing a lot of houses selling like hotcakes in Seattle right now.
Oh wow.
Yeah, like and we and like I actually like personally have a lot of friends in the tech companies out in Seattle, and there are several things that are happening. One, all the companies, I mean tech companies, are actually asking their remote employees to come back to Seattle, and they will not have a choice of staying in their local offices. So, for
Ooh.
example, I have a friend who has a manager who has already moved out of Seattle and now residing in Atlanta. But Amazon say no to her decision of staying in Atlanta and going work to in the Atlanta office. She has to come back to the Seattle office. Yeah,
Oh
and
man.
yeah, and that is painful. Yes, but like we think that this will be driving a lot of housing demand, at least on the rental side in the local market. And at the same time, last year we see local tech companies with a headquarter in Seattle, such as Amazon, Microsoft, Boeing, also Starbucks, Expedia, and Costco, which all have a headquarter in the greater Seattle area, laying off people left and right last year.
Yeah.
But they are rehired. They are
Rehiring as they grow.
already, and they are offering a lot of high paying tech jobs. So still we feel pretty bullish about like the Seattle market. The only thing we'll have to fight against, I should say, would be the relatively tenant-friendly laws.
Yeah. But then doesn't this mean that there'll be like a drop in real estate prices for those other areas where people initially moved to? Because I know like after COVID, when people were working from home, they started going to like secondary markets and, essentially anywhere, like the middle of nowhere, and the real estate prices were just surging for no reason. So won't those markets see a big decline? Because I feel like if everyone is forced to go back to the office and they start going back to the big cities, like it's only cities like Austin, Texas, or Columbus, Ohio, that are getting these offices built there that are probably gonna have growing real estate prices, and these other secondary or tertiary markets, the price are probably just gonna go back or drop somewhat.
Maybe, we don't know yet, but
Yeah, I'm guessing.
what we have, yeah, but like what we have seen so far during COVID is that like even people are required to come back to the Seattle office, for example.
Mhm.
People still have the motivation to rent a home or even buy a house in the outer areas of Seattle, even though like it means like a half hour or 45 minutes commute to them, just because like they are getting more spaces with the price they are paying, and they have a more like pleasant environment to enjoy in general.
Yeah.
So like while we see that like the downtown Seattle may have stabilized rents or even a fall of rents, we actually don't see it as much in unlike other like satellite cities around Seattle. So like this also gives us a reason to further explore what will happen in the Seattle market. But like so far, we feel very bullish that like the local salary levels is going to support like the rental rates of the local market.
Okay, cool. That's amazing. So then in those kind of markets where they have like, these offices and people are coming back to like work, what I'm interested in knowing is like, what is the target type of real estate that people are trying to get into for rent? Is it single family houses? Is like, you know what I mean? Is it small multi, large multi, mid? Like what is it? What sector
Well,
of real estate?
that is also a very interesting question and spot on. What we have observed is very interesting. We found out that like Gen Zers and younger millennials want to buy houses, but they don't necessarily feel that living in a high-end luxurious condominium as a downgrade. They feel there is no problem not living in a single family house and not having their own piece of land. So in that, yeah, but as long as like the building is high end, the condominium is luxurious with amenities, and like, and of course, like those, it doesn't mean that like those condominiums are cheap at all. It can be as expensive as like
Yeah.
a home in downtown. It's exactly like downtown Toronto in some ways.
And you're speaking my language because I'm a millennial and I live in a condo downtown.
Right.
In a newer
Yeah,
building.
so I think like those people are really looking for luxurious amenities. They are looking for enjoyment and ways to connect with their family and friends.
Right.
That like and they're always thinking about how much their environment or their building can offer them and how much convenience they can get out of it. Yep. So like, and at the same time, if we're looking at the like outer spaces of a city, around a city, I should say, we will be looking at, of course, like dual income families with high paying jobs, mostly buying single family because they want to raise more kids, or they feel that like it is a great investment to buy an asset that will be appreciating, especially in Class A neighborhoods.
Okay, so I guess if it was like the downtown core area, it's more likely larger multifamily, well, larger condominiums, really, right? That you're gonna see like the high rent rolls, but then I guess in the suburbs it would be more not apartments, right? It would be more single family houses, I'm guessing.
Right. Yeah, I think so. And then and they will be more popular. And there we will be seeing more apartments in those areas for people that are transitioning, meaning that they want to be a renter right now, but not forever.
Okay, so there's another thing that's interesting about apartments because you kind of brought that up too. Because I noticed like there are a lot of older apartment buildings. Because like I was in the BRRRR business for a bit, and what I noticed is a lot of people when we use the BRRRR method, especially for apartment buildings, like the new thing, because it was newer millennials that were coming in, right, to try to make it more fancy, we kind of try to make the inside look like and give the look and feel of a condo.
Right.
But then the outside just wasn't. So it was like
Right.
this mix, and because of doing that, we were able to get slightly higher rent rolls than like a
Right.
traditional apartment for just like low income families.
Right.
So I know that that is the thing, because in the suburbs you do find a lot of older apartment buildings that are run down sometimes. Maybe you have squatters, or you know what I mean. But then by buying that, you're able to actually increase the rent roll by a lot by just making the inside look fancier. But the only problem is you don't actually get the amenities that you get in a condo. Right, and that actually does play a big role in terms of like rent prices. Like I don't know anything about Seattle, but I know here in Toronto, like if you look at an apartment that has a condo feel and style for like a 1 bedroom, you'll be paying like $2,200, but then for like a condominium, you'll be paying about $2,700. So, so it's like a $500 difference there, right? So it's pretty significant. So, I mean, I can only imagine how much more that the bank will appreciate that property, give out refinance checks.
So, right. So the same thing is exactly happening in downtown Seattle.
Yeah, it's just making my gears turn in my head.
We can see that some developers are actually picking up older buildings, refurnish or remodel the whole thing to have a more chic look and feel.
Yeah.
So more and I think like they actually did a good job in making it more appealing to Gen Zers and younger millennials who are wanting to rent in a convenient spot that can allow them to go everywhere, even if they don't have a car.
Awesome. So let's talk about syndication. So how do you get into these deals? Like, why, you know what I mean? Like, if, for example, for me, like, let's say I want to be a part of syndication, how do I get myself in?
Right. So that is another very interesting. Yeah. So like I actually met another person. I originally met another person on Facebook. She was originally asking for help in creative finance. So like I offer, so like I at that time I was a little bit busy, but I thought to myself, I want to help someone out. Yeah. So I reached out to her and say, hey, I have not done, at that time I said, I have not done a deal yet, but like I'm willing to help. I have the knowledge and I can walk you through it. So, and then she ended up telling me that she is actually a part of a smaller multifamily syndication mastermind group and would like to a referral for me to join. And it is a relatively close group. It is a very small group. I also realized that the group is a little bit protective because they want to keep the quality of the people relatively high and with all the go-givers in the group. So yeah, I would say that like I got very lucky to be able to be in this group just to sit at the table with the right people. And at the same time, I am now volunteering myself to work with some GPs on their marketing work and also helping them build their marketing funnel for capital raising purposes in syndications. And also a lot of them need help with running their CRM, for example, at high level. So like, and then so
you're doing like a lot. That's a lot.
Right. So this really opens up to me opportunities to see behind the scene how they run multifamily as a business operation. And this also gives me a role to support them as an investor relationship manager, also doing marketing work for them. So yeah, it's great exposure everywhere.
Yeah, that's a lot of exposure. You know what I mean? And you'll definitely be able to get like invaluable, like not just like experience from like a skill set, but just the people that you're meeting and the networks. That's usually where you get the deal flow from, and that's usually how you get, like, that's how I've gotten into deals, is by talking to people and networking, mostly, more than anything else, right? Especially if you're like underwriting, it's usually just talking to people. That's what I've noticed. For me, yeah. But okay, that's pretty cool. Like man, like I'm thinking about syndication now, but it is tough, I guess, right? Getting into those groups and then trying to network, and then but so the what is your plan? What's your next step, like in terms of like syndication?
I have a lot of things on my plate right now. So our website is almost done, and I will be publishing blogs about multifamily syndication. I will very soon be
Hey.
opening it up to everyone for subscription. Like, of course, by subscription, I don't mean subscription to a deal. I mean like subscription to our newsletter, like for education. And I promise no spam emails at all, no marketing email. It's just purely there to provide education.
What is
Because
the
like
link?
what,
What's the
yeah,
website?
like it is steadyworkcapital.com.
All right, cool. I'm gonna put it in the link below so then people can click it. Yeah, tell me about it. So what kind of education is it about? Like what exactly do you talk about in the newsletter?
Right. So now most of the social media content I see out there around multifamily is still staying on the level of multifamily investing or multifamily syndication 101. And
Hmm.
I have personally gone through a lot of work just to get through the very technical side of things. So I am actually interested in providing more educational information about the more technical side of running multifamily investing and syndications. So for example, like just talking about market research alone, I will
Yeah.
be talking a lot of very technical things about shift share analysis, economic base analysis. How do you calculate location quotient of a neighborhood, and like all these terms out there and jargon that no one knows what it means. So yeah, and so like this
Can
was so
I
for like
subscribe? Can I
yes.
subscribe? Yeah, okay, cool. I'm probably going
Thank,
to like because like I love learning, just educating about real estate all the time. So this
mm-hmm,
seems like something because I'm not in the syndication space.
mm-hmm.
I'm just not right. So I do like single family and multifamily, but then I just usually buy for my own portfolio or I underwrite for people or I just buy for others. So then syndication is not really a world that I was ever a part of.
Mm-hmm.
So then learning about it, I guess you can really like get the research in. So then you'll be able
Yeah,
to like get into it at some point. I feel like
exactly.
yeah.
So yeah, and then like another thing is that I realized that there are a lot of data sets out there for
Hmm.
serious research work that is
Yeah.
bad. So sorry.
Okay.
Yeah, I guess I am like very strict for. I'm very transparent about this thing.
Yeah.
So yeah, so like I would like to introduce people to the use of serious data sets for
Hmm.
them to do their own research so they get more benefits out of it. For example, like I personally like FRED data, like meaning Federal Reserve of St. Louis office, and also BLS, Bureau of Labor Statistic data,
Hmm.
because like they are government data that is seriously researched and published, and that it is not easy even to read the graph and to get the data out of it. But I think once you know how to use the data, it gives you a lot of benefits in assessing what is in front of you in the future, what will happen to a market. So you can have the more tools to make more informed decisions.
That's
Yeah.
amazing. So
Mhm.
how can people find you? How can they connect with you?
Right. So anyone is welcome to email me at info@steadyworkcapital.com. I am also on Instagram, and my handle is invest with Mitch, Mich. Yeah. So like, please DM me, connect with me over there. And if there is anything I can help you with multifamily, let me know anytime. I'll be more than happy to help. So yeah, because I come from an academic research background before marketing and before real estate, I'm always about like researching and teaching.
Hmm. Awesome, amazing. I know we're running out of time soon, but thank you so much for coming on. I really appreciate it. I feel like I learned a lot. I'll definitely be subscribing to the newsletter. I'll leave all your links and everything below. So yeah, thank you. Thank you so much. I really appreciate it, Michelle.
Thank you. Thanks for having me.
No worries.